So a lot going on in here today in the overall markets. We mentioned in our last video that we did last week that traditionally going into Easter, you have that Good Friday, so you have a shortened week. Traditionally, when you're going into that shortened week right before Easter, you are going to be a little bit bear or bullish, that is, right? So we expect to see some little pop. That didn't happen today, and the problem is we're not in a traditional market, right? So you have the war going on in the Middle East, you got inflation, gas prices all time high. Paul Skeens can't get out of the first inning, right? Why not? So everything about this market right now is untraditional. Our VIX is high, it's elevated. But the big key that I keep on seeing is that our TLT, so the bonds, I mean, you can look at whatever you want, but I usually just look at the SPY, the TLT, and then I compare the VIX and the Qs. The TLT compared to the SPY, they keep on running together, right? So you'll notice today on this weekly chart, obviously the 50-day SMA, we didn't even get close to that today. We mentioned 626 as a nice support, didn't get down there. We got to about 629. Then you had that $2 pop going into close. That's what's giving us this 631.97 quote right here. But we had this overall drawdown, but we did have these pops midday. Actually, TLT went with us just for a little while. So as you can see here on our TLT weekly chart, we stayed green, obviously, right? We were up around almost 1.5% from last week's close, but we opened green. And when we actually got that pop right around lunchtime, almost midday in here today, that sharp little run up that we got in the market, TLT went with us. So that should have gave us a bunch of warning signs right there. And then when the market started to pull back, so did TLT. And then as everything pulled back more, TLT started to just kind of stay put where it was, right? So that tells us right there, hey, when TLT is trading with the markets, that's not really a healthy market. That's not traditional, right? Usually what we see is we see SPY and the Qs, everything go up. You see bonds, VIX go down, gold go down, etc. Now, when everything is going with the market, and you're getting that higher VIX, then things get fishy, right? So that's what was untraditional. But going into close, we had TLT basically staying put, if not going higher, right? So now my thought is, as we're entering in the rest of this shortened week, are we going to move back to that traditional market, right? Are we going to get that inverse correlation that we usually see? So that is what we're looking for in this overall market in here, right? So on the TLT, we're looking at a high in here, or I guess a resistance of 86.90. Anything above there, we're looking at that 88 level. To the downside in here, we are going to be focusing on that 85.98. And likewise for our SPY, we mentioned that 626 is going to be an area that we're going to watch. So if we do come down and hit this, if we watch that TLT spike close to that 88 area, then we know, hey, guess what? We're heading in the right direction, because now once we hit that resistance in TLT, we have to pull back. Therefore, the market has to go in an inverse correlated direction, right? So that's what we're looking for in here tomorrow, or at least in pre-market. If we can get a gift overnight, hey, come down here, let us touch these 626s. We'll pop that TLT at 88, and then we can shift back, and then we'll start working on that bull run going into the end of the week. But if not, what we're looking at in here on the SPY is anything below 626. We have 615 on deck. And then outside of that, it's basically the 600 psych level. But if we do get a pop in here to the upside, we're going to be watching that 637 level. And then above there, we're looking at this 50-day SMA, which is trading at 648. And then you have a 9-day EMA right here at 658. So look how tight these are now getting here on this overall weekly chart. If we can get a crossover of these, or at least a nice squeeze, then perhaps that should be, hey, that should tell the traders, hey, okay, let's take a breather here. We're getting too carried away. Let's kind of consolidate, and then we'll get another pop, right? So that is kind of what we're looking at here in the overall markets. Something else that I noticed in here today is that Amazon had the nice little inverse correlation. We had that overall green day in here today. We were holding this lower trend line, and yet we gave it all away, and we ended up down here only to barely hold up these 200s. We're about 95 cents away from that psych level, right? So you can see that we are right here onto that upper trend line, or the lower trend line, that is. It's now going to be our resistance. That's trading at 202. Anything outside of there, we're going to be looking at 9-day EMA at 208. And then we're looking at the 218 levels right around here. But if we cannot get back into this overall structure, then we're going to be looking at that 197 level. And then anything outside of there, it is going to be all the way down here at that 190. But today it was looking good. Thought, hell, okay, here we go. The market is basically kind of a little bit choppy, pulling back a little bit, but Amazon had a green day. It's holding. And then obviously once everything kind of gave up, so did Amazon. We're also going to take a look at AMD while we're in here as well. More or less kind of the same story in here. But we are getting close to I'm sorry, we did breach that lower trend line of our overall structure, but tomorrow it's going to be the question of how close are we going to get back up here, and then are we going to hold it, right? So that's what we're looking at in here. The overall structure, the lower trend line, 197 is what we're looking at. Anything outside of there to the upside, we are going to be looking at that 202 mark, which is basically where your 9-day EMA is. To the downside in here, nothing's really stopping us until the 185. So hopefully we can climb back in there and stay. Anything outside the 185s, you have that 50-day SMA sitting at 188. So that is two interesting stocks in here that basically just kind of breached their lower trend lines of their overall structure. We're going to see if we can climb back in them. Just a little nudge whatsoever to the bullish side in here tomorrow would get AMD and Amazon back in some good graces with our overall weekly charts. And then we can worry about those next moving averages going forward. But again, the main key is going to be that overall market correlation. I know we sound like a broken record when we're saying this, but once we get that resistance with TLT, and then we start to get a pullback in here, then we're going to see that overall market rise. Last but not least, we do have to mention oil, just because that is what's going on in the news in here. You can see that we changed our overall structure on this weekly chart. We're just going to go, if the chart's giving us something, we'll just have to go with it, right? So that's why we have these sharp trend lines on here right now to the upside. Basically, once we hit 133, then we're looking for a pullback, because that's going to be the upper channel of this overall structure in here. But 130 should be a nice big resistance for us. We've been basically, our RSI has been overbought for quite some time right now. We're sitting at 87 currently. So any sort of pullback in here would be very, very healthy for us overall, technically. But obviously, this is all news based. So if we can get that resistance to hit in TLT and we start to get a pullback, look for oil to go as well. And then look for the overall movement in oil to kind of drag TLT down with it, right? So you might have to have your bonds kind of push things over the edge first. And then once oil starts to go, then it's going to drag everything down with it, right? So then you're going to get that market pop that you wanted. But then your oil, your gold, or your oil is going to drag your gold, your TLT, your VIX, everything down with it. So that's what we're looking for overall in oil and our market correlations. We're here, might as well just talk about the VIX as well. We mentioned in the past, hey, 23 to 28 is probably going to be our new VIX that we're looking at in here. It's going to be our new norm. Well, guess what? We're outside that norm. We were outside of it last week for a little while as well. So we're up in the 30s now. I still believe that between 23 and 28 is going to be our new normal. But at the moment, it's looking like this thing is just going to keep on going and going. So this VIX getting reverted back to the mean, it's going to take a push, because we need something news-based. We need something catalyst, or just the technicals to give all the way out for that overall inverse correlation to happen in the markets and that nice rollover, right? So we need to see everybody getting back out of the bonds, getting into the equities and the markets. We want to see them get in retail, industrials, things like that. We want to see them get out of the or out of oil, and then that thing should actually push us in that inverse correlated way. But until then, we're just going to keep on eyeing on everything in here. 30 is going to be your support for your VIX. Anything below there, you're looking at 28, below there, 23. If we do get down here to 23 VIX, we're just going to chalk it up and say, hey, that's our normal for now. We're just expecting anything between there and that 28 to be our new norm. But anyway, we need to get out of these 30s for sure. And let's get back on the good side of this VIX so we can start playing around in here. overall, that's what we're looking at in the market. So again, look for that correlation, look for AMD and AMZ to get back in the good graces, technically in these overall structures in the weekly chart. And let's see how our overall correlations with oil, bonds, and the VIX correlate with the market going forward. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.